Welcome to another live stream session. Today on the 6th of February 2026. Everything is crashing. It's not just the altcoins, but yeah, the altcoins are wrecked. Some people were wrecked before that. But really, Bitcoin is crashing massively. And that's not pretty. We are at $63,000. We have lost from our all-time high close to 50%. And because things are changing so quickly, because we are falling so quickly, I think it makes sense to just have another live stream session and not just record things. I just recorded something this morning, and just a few hours later, it's already completely outdated. But of course, I also very much like to chat with you during times like this. I like to take questions. I like to also share what I currently do and where we might potentially bottom. So yeah, first of all, welcome to everybody. Very happy that you're around. Feel free to, of course, give this live stream a little like, because it will help to spread the word. It will help to expose this with the YouTube algorithm. More people can join. And feel free to also share what questions you might have. So yeah, let's start off first with what's going on here. This here is the stablecoin market cap relative to USM2. So how much is money flowing into the crypto space? And since the beginning of October of last year, so for now roughly 4 months, we have not seen any money flowing into the space at all. And that's very uncommon for a bull market. So have a look at what happened prior to October of last year. We tended to see very quick inflows. What does that mean? Inflows into the system, or stablecoin creation, means that people are depositing their hard-earned fiat currency, say, on a centralized exchange. The centralized exchange then sends this over to a stablecoin custodian. The stablecoin custodian holds the funds, maybe buys some government bonds with it, some T-bills, and then issues the stablecoins on the chain. And the stablecoin issuance we can see with this chart. When there's a bear market, we rather see stablecoin redemption, right? That's when people withdraw from the crypto ecosystem. But since October of 2023, we saw a stablecoin expansion. We saw money flowing into the space, which then also helped crypto prices. Now, since October of last year, that has changed. Have a look at the Bitcoin price since then. So we did not see any inflows anymore, and that then started the bear market. So I don't think that this is a coincidence. I don't think that a lack of inflows into the ecosystem just coincide with the top in the Bitcoin price and in crypto prices in general. I think this is structural. So yeah, this is my first little start of this stream. Let's go through a first comments here. So first few comments. I'm seriously thinking of buying right now. It feels like it is falling very fast, and that usually means a quick recovery. So 2026 could look juicy. Looking forward. What you, Gerhard, have to say? So yeah, it's an interesting question. I think it very much depends on now the pace of the sell-off. And that's also one of the reasons why I'm making this stream. When we are selling off quickly enough, as quick as we did during the COVID crash, right, where we fell by roughly 60% in the span of 48 hours, then this is clearly a cascaded liquidation event. That's very similar to what we also saw on the 10th of October of last year. When people are forced to sell, when there is no liquidity in the market, and one stop loss triggers a sell-off, that triggers the next stop loss, that triggers another sell-off, etc., etc., and we see all the leverage getting out of the market, that's a good time to buy. So when the sell-off is quick enough, there was no time for new liquidity to enter, that's a good time to buy the bottoms. It's usually also very hard to buy those bottoms, because very often the infrastructure tends to completely break down. So during COVID, actually, it wasn't that easy to buy the bottom, because Coinbase went down, Binance went down, and even the decentralized exchanges, say the Uniswaps of this world, they had very high gas fees. So at the time, most people were still directly transacting with the Ethereum chain, and if you wanted to buy the bottom, you had to pay hundreds of dollars just to make a single swap. And the same is true if you wanted to exit. So there was simply just the entire system was very clogged up. The number of transactions spiked massively. And if you see something similar again, right, if first platforms start to go down, if the price tends to go down quickly enough, then it makes sense to buy. If we just trickle down now, hour by hour, a little bit, it's not necessarily a cascaded liquidation event, right? And so then there's a higher chance, I believe, that we just consolidate at the lower level. So it very much depends on what's now going to happen in the next few hours. But so far, we are already selling off way quicker than I thought, right? We're now at $63,000. And this is interesting because this is actually lower than where most other long-term holders took profit during this bull run. Let's see if I actually find this very quickly. Where do we have the value days destroyed? So this here is a metric that shows what are the long-term holder whales doing. So when a lot of Bitcoin has been dormant for a while, has not been moved, and then suddenly it gets moved, right? After years of dormancy, it suddenly gets moved, probably in order to get sold. Then this metric spikes. And so interestingly enough, right, the long-term whales, they tend to sell in a bull market, right? They tend to sell into the rally. We've seen this time and time again. And this time they sold at around 70K. So our current price in Bitcoin is already below the price at which the long-term holders, the whales, tended to sell. So it's very unlikely that we're going to see continued selling by the whales. We also see this in the value days destroyed metric. The values, the whales are currently not selling. The whales, the long-term holder whales, they simply keep on holding. So let's see how this continues. Bearheart would have still been a good name. Yeah, I changed it. First of all, I got a lot of criticism for it. I don't really like to always face that criticism, but also it's not really reflective of the seriousness of the channel, right? I still try to be as data-driven as possible. Love your measured approach. Much love and respect coming away from Australia. Thank you very much. Greetings to Australia here from Malaysia. I'm currently in Kuala Lumpur. Short squeeze is possible, but this is not the bear market bottom. Short-term, long trade is okay. Yes and no. So in general, short squeezes, I believe, happen most the least liquid an asset is, because then it's easier to manipulate the price. So it's more profitable to manipulate the price. So let's say you've got an altcoin of only 100 or 200 million in market cap, and then you're shorting this aggressively with 1 or 2 million, there's a good chance that some manipulators in the market, some market makers, they buy up the spot supply in order to squeeze you out. This happens frequently. The larger the asset is and the more liquid the asset is, the less likely short squeezes become. And so a short squeeze in Bitcoin is pretty much impossible. A short squeeze in smaller altcoins is definitely possible. But I don't think that this sell-off is caused by too many shorts. So this is different to the leverage event we had on the 10th of October. I think this is really spot holdings getting sold off. And the spot holdings can be by the ETFs, they can be by treasury companies, they can also be by government entities. So all three of them seem to now be selling. Actually, it's in the recent Glassnode Insight newsletter. So it seems to be spot selling that's actually going on. And that spot selling now gets just cascaded down via liquidations, probably stop losses. Short squeezes only happen if there's enough short interest, right? If enough people are actually betting on falling prices. And that's not necessarily happening. We are betting on falling prices, right? If you've been following this channel for a while, we are currently making money with this, more on this in a second. But the majority of the market is not. Smash the like button, everyone. Yes, thank you, Eli, 10K. I very much approve that message. Smash the like button, let new people come in here and hopefully not lose as much money in this market, potentially even make some. Wait till Monday or Sunday night to buy. Yeah, it's very hard to predict what happens in this very short term. Historically, there isn't too much structure in terms of returns per day. So day of the week or month of the year, right? So there are these ideas in the stock. It originates from the stock market. Things like there might be seasonality in the market. So sell in May and go away is a very popular saying in the stock market. But when we actually measure this, when we look at the returns over the years based on the month, or we look at the returns per day of the week, there is very little structure in it, as in it's just random noise. It tends to be like returns are just more or less normally distributed across the months or across the days of the weeks. And so maybe in this particular instance, right, if this is mainly selling from DATs, right, from digital asset treasury companies, then there might be some truth to it. They might not be able to sell as much at the weekend, but in general, we do not see any kind of predictability of returns based on day of the week. So that's just what the data is saying. Okay, let's see what else we've got here. What would be a good time to enter the Ethereum moving average long short vault? Might it be too risky right now? Yes, this is a very good question. This is actually something that I have prepared, not just for Ethereum, but in general, right? The fundamental problem that we currently face is that we time the market, right? Or I time the market based on the momentum, based on the trend. And the moving average is a pretty good measure to figure out where currently the trend is. And if the price is below the moving average, we tend to trend down. If the price is above the moving average, we tend to trend up. We can do back tests, what kind of moving average works the best. The problem is if we are too far away from the moving average and we are let's say now we are below the moving average, we are bearish, we rather bet on falling prices. But when we are too far away from that moving average, maybe it might be risky, right? Because we could be rallying short term, still stay below the moving average, but maybe short term is not the best entrance. And so let's have a look at that data. So where do I have this? So over here, right? So this is Bitcoin with the best moving averages. So in orange, we've got the 44-day simple moving average. In turquoise, we've got the 125-day simple moving average. And those two moving averages tell you now why we have been betting on falling prices, right? We are below that moving average. And the reason why we take those two is because of the back test, right? We've back tested all the moving averages to up to the 200-day. The 44-day works good on the short term. The 125-day works good on the long term. Buying and holding Bitcoin during the same time period is here, this line in black. So we can tell that this is not just overfitting, right? So I got a comment on the last video where I discussed the strategy that this is just overfitting. You're just cherry picking the data, but really it doesn't even matter that much what moving average duration you use to follow the strategy. Those two have been the best, right? The 44 and the 125-day. But even if you used another one, you'd still be doing better than just buying and holding. And so the idea is just, right, we go long when we are above, we go short and bet on falling prices when we are below. And so the fundamental problem, and that's here the question that was asked, right? Are we potentially now too low? Does it still make sense to enter those trend followers? The fundamental problem is that we are bearish. We would be betting on falling prices, but we would still be bearish even if Bitcoin was to rally now by, say, 30%. Right? We could go back to $84,000 and still be below both moving averages. We'd still be bearish. And since we are currently betting on falling prices, that's the potential risk. Right? It's very comparable to, let's say, COVID. So let's see where we find COVID. Right? We crashed quickly during COVID by many percent. And we had a lot of extension from the moving average. And so then entering over here into a trend follower where we now bet on falling prices, just to see the price then recover and then getting wrecked. That's not great. And so what can we do here? I think it makes sense to just look at history, right? How much did we historically extend from those moving averages? What we see here at the top, let's see, that's the 44-day moving average extension. So that's now the extension from the orange line. So when we look at how does this develop over time, where are we currently? This year is the COVID crash. This year is the final capitulation in 2018, right? We went from 20K to 3.5K. Then over here, we've got the first sell-off event during the bull market of 2021. Here we had the FTX collapse. And now we are very close to the levels of FTX and the turnaround from the bull. So it seems like it's very likely that we have finished this bull market. The sell-off is strong enough, and it seems to be comparable to the sell-off in May of 2021, that this positive momentum, right, where we went from 16K all the way to 125K, has now clearly been broken. And yeah, that's the issue. Could we potentially go above the moving average? Could we see a relief rally similar to Q3 of 2021? Possible, right? Nothing is out of the question. Everything is possible in crypto. But yeah, the positive momentum for the bull market seems to be very clearly broken. Are we very much extended from the moving average? We are. Have we seen stronger extensions? We have seen that as well. So we could potentially sell off a bit more, right? We are still at 60 something K. We are not yet at 50 or at 40K. There is more room to fall in case this accelerates, in case more liquidations occur, right? In case more stop losses get triggered. If we do see that, right? If we suddenly do fall to 55, maybe even 50K, maybe below 50K over the next hours, then I will definitely buy the bottom. I will do some speculative purchases, not on the basis of moving averages, right? I will just do a very short-term trade, similar to what I did during COVID. So if we accelerate in the sell-off, this is forced selling, this is a liquidity crunch. If we do not accelerate in the sell-off and we just stay at the current levels, we're probably going to stay there for a while. We're not going to see a V-shaped recovery. That's at least how I interpret history. So yeah, if we do see more sell-off, a good time to buy. Right now, it's a bit early in my opinion. But yeah, we are currently making money with all of this, right? So it's just following the trends. We are now close to $1 million in profit with this recent short. And it's just based on that data. It's just based on, if you use the 125-day simple moving average without leverage, you're seeing this outperformance versus buying and holding. If you add some leverage to that, which we do in the vault, then the outperformance looks even better. So that's fundamentally what we're doing. The 200-week moving average still slightly outperforms buying and holding, but not by much. Right, we're just too slow with reacting to the movements. Let's go through a few more questions, a few more comments. Do you think about quant computers and the threat it could pose to crypto market? No, I do not think that that's a problem at all, because if quant computers are able to break encryption, everything in the internet would break, right? SSL would break, HTTPS would break, all our authentication mechanisms in the internet would break if our encryption mechanisms that Bitcoin is based on breaks. And so what would happen in case quant computers were really able to break those kinds of encryptions? We would simply see another update of Bitcoin. It would be pretty much, there wouldn't be any dispute around this, right? Bitcoin needs to become more safe. And so there would simply be an update of the encryption mechanism, another fork, and that's about it. A soft fork, a hard fork, I don't know which one, but there will be some kind of update and it will make Bitcoin resilient. So I do not think that quant computing will be any issue, quantum computing. Okay, guten Abend aus Spanien, Gerhard. Vielen Dank für den hervorragenden Kommentar. Thank you very much for the message. Yes, I'm originally from Germany. I now live in Malaysia. I used to live more than 10 years, I think 13 years in total in Hong Kong. So I've been in Asia for a while, but yeah, originally from Germany. Greetings to Spain. What about short squeezes by institutions? I read that Jane Street was manipulating the BTC price by selling it beginning of the year. If there is manipulation of Bitcoin itself, right, since it's so liquid, that kind of manipulation has to be very, very short term. So it has to be in the form of front running major purchases. So let's say Michael Saylor was to buy tens of millions, hundreds of millions of Bitcoin, and then hedge funds know about those purchases ahead of time. They might do some kind of front running. But any long-term manipulation of Bitcoin specifically, I think is very unlikely. It's just too liquid and too large for that. And it's not worth it, right? If you can manipulate smaller assets, why not manipulate those first and make money that way? So yeah, I do not believe in medium-term manipulation of Bitcoin. Joining Premium was my best move, longing on my family time while Berhard does the hard work. Frank Dark from Premium here, not a bot. Yeah, thank you very much for the comment. Feel free to, of course, join. It might be hard if you're now lost during this crash because there's also quite some cost involved. But I hope that I provide more value in Premium than I charge, especially if you've got a portfolio that's like more than $10,000 or so. It probably should be worth it. At least I think it was worth it for everybody that was involved and at least semi-followed some of the calls that we made. Bitcoin's bear market is projected to last through Q3 2026, with some analysts forecasting a potential bottoming in the 56K to 60K range. Yes, so this is actually another interesting question, right? Let's say we don't continue to sell off aggressively now. Let's say this was the bottom at 63K or so in the short term, right? Where could be the long-term bottom? If this is now the beginning of the bear market, where could be a long-term bottom? And we've got the measure of the realized price, right? So that's the average cost basis of the market. And historically, we tended to bottom out below that realized price. So realized price was not the perfect bottom. It was just a good indication of where selling pressure might ease. Currently, the average cost base of the market is at 55K. And so that's probably where selling might slow down to a degree. There is still correlation though between the risk on assets, right? Traditional finance, technology stocks, and crypto, right? So if technology stocks were to suddenly sell off, if say Nvidia was to suddenly sell off, that would obviously also have a spillover effect to the crypto markets. And then we don't really know what happens with crypto because Bitcoin has never really seen a real crisis. The only crisis it has seen was COVID. During COVID, it sold off very sharply, then recovered also together with the rest of traditional finance. But we've never seen something in the sense of a GFC, a global financial crisis, right? The property crisis in the US. Or we've never seen something like the .com crisis. And unfortunately, we don't know how Bitcoin will react during times like this. My expectation is that first it will sell off, and at some point all the leverage will be gone, and then there will probably be a decoupling again from Bitcoin's price developments and tech price developments. But it's yet to be seen. But the very first potential bottom, medium-term bottom, and where first selling pressure might ease in case traditional finance does not sell off, is the 55K mark. If you want to be a bit more conservative, you can use the long-term holder realized price. So instead of using the entire realized price, you can look at the long-term holders. They tend to adjust their cost basis a bit later. Here, the bottom is at 40K. And again, we might fall below that. With COVID, we just dip below this within the day. But when we are in a prolonged bear market, we might go all the way up to a quarter below that cost basis. So that would put us at a potential bear market bottom at 30K in Bitcoin. Now, I'm not making all of these things up, all of the numbers up, right? I'm talking about these kind of indicators for a long time on this channel. Even during the bull market, etc., I always talked about this cost basis. And the reason why I think it's so important is because really we can't value Bitcoin that well. So the way this works is in traditional finance, right? I actually have a traditional finance background. So I studied investment management and financial analysis at the HKUST. So I did a master's at the Hong Kong University of Science and Technology. And the way we tend to value traditional assets is just by looking at their cash flows and by projecting their cash flows. So cash flows can either be in terms of how much earnings a company has or how many dividends a company pays. And so we try to figure out what are the future dividend payments of a particular stock. And then we discount those future cash flow projections, those future earnings projections, to today. So discounting just means that we take less value of a cash flow that happens, say, in 20 or 30 years. We're less interested in that cash flow in 30 years because there's a time preference of money, right? We like to have our money today, not in 30 years, but also because there's inflation. There's a risk-free rate, right? We can get, without any risk, some kind of cash flow if we just deploy this in government bonds. And so because of that, we have to put less value on the cash flow in the future. We have to discount the future cash flows. So that's a DCF method, right? The discounted cash flow method. And so this is how you value traditional assets. So you just project future cash flows. That's true for stocks. That's also true for property. That's true for everything except Bitcoin, right? For Bitcoin or for gold, for non-cash flowing assets, we have to use other parameters. For gold, I like to use just the monetary base, right? We look at the market cap of gold and we divide this by current USM2. We get a relative valuation. For Bitcoin, I think the best is just the average cost basis. So if there are still some hardcore believers in the space that think that Bitcoin over the decades will go up because its supply expands less quickly than the supply of fiat currency. So if you believe that long term, over the decades, Bitcoin will go up, then what are you doing actually if you're currently in losses as an individual investor? So we can also make the same analysis, say, with the property market, right? If you buy a house and the house goes down in price, but you do believe that houses over the long term go up because of monetary debasement, what do you do when the house is going down? If the house price is lower compared to when you bought it, you're probably not going to sell the house because you're scared it will fall further. Right? If you've already got the long-term time horizon anyway, right? If you've got a long-term outlook, you're not selling in losses if you long-term believe in the thing. You only sell if you have to sell, if you get forced liquidated, if you can't make your mortgage payments. But outside of that, you would not sell if you're in losses. And the same is true, I believe, for Bitcoin. So if there are some people that still believe long-term in Bitcoin, if they are currently in losses, they're not going to sell the Bitcoin until they really have to. And that's why I believe the long-term holder realized price is so useful. The long-term holders are not selling if they are below their cost basis, if they don't absolutely have to, if they still believe in BTC. And historically, it was 1 quarter below that cost basis. That was the bear market bottom. That would be 30K. So that's where I think a bear market bottom could be. And I do believe that we now entered a bear market, as already mentioned at the beginning of the stream. By the way, I tried to make this stream a bit shorter compared to the prior stream that was 3.5 hours. I like to keep this probably at 1 hour, 1.5 hours. But yeah, feel free to ask your questions. I will try to answer as many as I can. Okay. I got into crypto mid-August for the first time ever and learned a ton from Gert's premium channel. Also not a bot. Thank you again for this. Right? I'm almost reading the comments just one by one. At first, I lost about 8% messing around thanks to the moving average fault. I'm up 48%. Yes. We have been on the right side of history now. Would you consider take profit on the moving average vault if the historical extension values are hit? No, not on the vault. So again, right, the discussion, we are too much extended from the moving average. Might we take profit? I don't do this because I'm simply just following the backtested result. And with the backtested result, we did not make much money during COVID, right? We had the flash crash and then the flash recovery. I'm not sure flash recovery is the word, but you know what I mean. So the moving average vault actually did not make money. It also didn't lose any money during that period. And if we do enter a flash crash now, let me check where we currently are. We didn't move much yet. We are now at 62K. Depending on where we are, if we do crash further now to say 50K and below, I personally would announce just to the members, and also it's now here on YouTube, that I buy the bottom personally. So I would just take some leverage on my personal account and basically balance out the short that I have on the vault, potentially overcompensate, right? I want to be net long and then buy that bottom that way. But for the vault, it's just I follow the strategy 100% to the backtest because the backtest worked and I trust in the backtest and I want to not mess around with this with individual decisions. Because let's say you diverge from the backtest, you make a different choice and that choice actually ends up not working out. And the people that invested into the vault for the backtest result suddenly get worse returns compared to what the strategy would suggest because of an individual change. Then I think that's not fair, right? People invested because of the backtest, because of the data. I mess around with it. It makes things worse. There's always a chance it could get worse. Nobody knows for sure where things are going. It's all just a game of probabilities. And so I keep the backtested strategy fixed at that rule, right? We go long above the 44-day simple moving average. We go below, and we go short when we are below. And I don't do anything besides that for that vault. But if I personally see that the market is currently extremely sold off, extremely delevered with a lot of forced liquidations, then yeah, I will simply just announce that in a separate trade and counteract whatever the vault at that particular point in time has as a position. Thanks for the question. I think this is a very good question. Is there a concern the S&P has more downside for Bitcoin to drop further? Yes, this concern is real. Let me actually show you. You asked now about the S&P. But since Bitcoin is a bit more correlated to the Nasdaq 100, let's actually take that. Let's take the Nasdaq 100 relative to the US money supply and look at this over the very long term. So that's the chart. Okay, this is technology stocks relative to the US money supply. This year was the .com crash. This year was the global financial crisis. And Bitcoin was created as a response to the global financial crisis, right? The Genesis block has a reference to an article of the Financial Times that mentions a bank bailout. So taxpayers paying for bank equity, bailing out the banks. And Bitcoin was basically created as a countermeasure. Hey, let's try to not get robbed of our purchasing power by the greedy governments that support the banksters. That was the idea. So Bitcoin was created at the beginning of 2009, and then the real pricing happened only at around middle of 2010, right? That's when the Mt. Gox trading, etc., started. But what we can see here is that technology stocks never really crashed during Bitcoin's existence. The only thing they saw was the COVID crash. During the COVID, Bitcoin went down by like 60%, while the Nasdaq only went down by 30%. So there was a 2x lever. We don't know what happens if suddenly the AI bubble was to burst, right? If AI stocks were to fall by 85%, which I don't think will be certain, but if they were to fall, then who knows where Bitcoin could be? Maybe even lower than 15 to 20K. So that's why diversification is important. That's why just dollar cost averaging is dangerous. That's why I want to have different asset classes and why we want to ride the momentum as well. Okay, so nothing is certain. If we just look at charts like this, right, the realized price or the long-term holder realized price, effectively what we assume in the background, and that's what most people do not understand, effectively what we assume is that this year is representative of how financial markets work. And it's not, right? It's not that tech stocks can only fall by 30 to 40%. They can fall by much more. And if they ever were to fall to the same degrees as they did during .com or during the global financial crisis, all those models here will look extremely dumb. So yeah, just be aware of this, right? Things can be much worse than people expect. This bear costume over here might have its use in the future. So I might not throw this away anytime soon. Compared to prior bear markets, it's falling fast, isn't it? That's unusual. Yes, it is falling quite quickly right now. So there's only two options, right? Either we slow down with our current selling and we just consolidate at current levels, or we get real forced liquidations, lower and lower, something systemic breaks, maybe some DATs have to sell further, and then we get a very quick continued sell-off that might lead to a V-shaped recovery because some people might want to buy those low prices. But it's unlikely that we're going to slowly go up from here. I think that's the least likely scenario. I can't believe it. I made it to a live. Yes, I don't live stream that often, actually. I only I'm like my second live stream of this nature. Yeah, but I enjoy it. I enjoy communicating. I enjoy talking to you guys. I very much like the interaction, especially the ones that, you know, that watch here, that comment on the live stream. There seems to be a more positive attitude here, even during times like this, compared to the YouTube comments, right? The YouTube comments under regular videos come from a lot of strangers. There's no real direct interaction, and there's a lot of negativity, especially when people have lost money. Here, this direct chat, I believe, I have the impression, has much more positive vibes to it. So I enjoy live streaming actually quite a bit. Happy to be in the vaults. Great work, Gerhard. Thank you. Yeah. Does the backtest data include the trading fees? Yes, it does. 0.2% per buy and sell for the spot backtest. So that's for the 125-day simple moving average. Is the best for spot trading. For the perpetual futures trading, it's 0.05%. So that's the fee that you have on Hyperliquid without any discounts. So if you don't trade much and if you don't have staked anything on Hyperliquid, then 0.05% trading fees is the usual, and that's what I included in the backtest. What I did not include, though, is financing fees, by the way. But I did check the returns based on leverage, and when we increase leverage, the returns tend to increase faster than the financing costs, so that should be fine as well. And there's two parts to this, right? When we go short, we even earn financing costs, so it should be all right. Michael Saylor is in trouble. Yeah, let's see. Not yet. So it depends on how long Bitcoin will be at lower prices. He is more levered than he used to be, but the real trouble actually comes when Bitcoin stays at low prices for several years. If it goes down quickly, he doesn't just get flash liquidated. So his loan doesn't get recalled. But if he stay down for low enough and he can't make payments, dividend payments, then it's a problem. So yeah, if you have a prolonged bear market for the next 3, 4, 5 years and we never recover, then Michael Saylor is in real trouble. Then he has to sell Bitcoin. Otherwise, he probably does not have to do that. But we don't know what happens to all of those other companies, right? It's not just Michael Saylor. We can have a look at this. All those treasury companies for Bitcoin. So we've got the ETF balance in purple, and we've got the treasury company balances over here. And of course, Strategy, or MicroStrategy, I still like to call it that way, has most of the holdings, but they're probably not going to sell anytime soon. But what happens with those other 0.4 million Bitcoin, right? If they suddenly have to sell, that would be not that great for the price development either. And I doubt that they are as thoughtful about their leverage compared to Michael Saylor. Michael Saylor is the OG. He really has thought about the strategy. ETH will go to 800. What do you think? I don't think that ETH, relatively speaking, is as bad as it used to be. It's still not great, but it used to be worse, right? So things played out pretty much as we thought, as in Ethereum sold off more than Bitcoin. Tom Lee is probably more in trouble. But we are now at the lower end of this trading range. So I'm not sure if we can short-term bounce and Ethereum might outperform Bitcoin by another 12%. We might not even notice it, right? Let's say the entire market crashes by another 20%, but Ethereum only crashes by 10%. That would also include a bounce. But yeah, Ethereum isn't as bearish anymore as it used to be. It's not great. I wouldn't buy it, but I wouldn't necessarily go super aggressive on the short now. I'm still short Ethereum, but it doesn't make sense to open a short position on Ethereum right now. At least that's what I think, right? Always the caveat, trying to be politically correct. But I think you know what I mean, right? I just state whatever I think. What would invalidate your long-term Bitcoin thesis, not price fundamentals? I don't even have a very long-term thesis on Bitcoin, to be honest. I simply just look at what it's doing relative to its realized price and what traditional finance is doing. And I just trade it opportunistically. I do have some Bitcoin long term that I've stashed away that I never touch. But even if that was to go to zero, it wouldn't make any real impact, financial impact. So that's just like a fun allocation. But besides that, I actively traded. And since the market timing over the last 5 years has been outperforming Bitcoin quite successfully long term, I don't see a reason to change that. So it's just another. So for me, the crypto markets is just a relatively inefficient market compared to others. So let's say the currency markets are very efficient, right? There's all kinds of quant traders there, lots of hedge funds, lots of liquidity, very little edge to be had there. And the crypto markets, comparatively speaking, are younger. There are less hedge funds. There's more retail. And because of that, the competition isn't as strong. And because of that, outperforming the competition is comparatively speaking easier. It's still not easy, but it's easier compared to, say, currency markets. And that's why I'm in the market. It's not necessarily that I am a Bitcoin maximalist, that I think Bitcoin will be $1 million in 5 years. It might be at $1,000, right? If the AI was to pop, who knows how low Bitcoin could go? Much lower than most people anticipate. So yeah, I'm just adjusting. I rather have my medium-term thesis on Bitcoin, and I just act according to that. Aren't you tired? Yes, I am. But I also have an early sleeping rhythm. Normally I wake up at around 4 o'clock. This time I woke up at 3 randomly again. I had probably too much coffee yesterday and checked the prices and saw the crash, and I thought, okay, I have to react to this, to check what's going on. Do you think we shouldn't buy until treasuries sell their crypto? I don't want to rebuy until MSTR go down completely. Yeah, you can wait for some kind of cleansing event like this. I do actually expect that in case the bear market continues, which it probably will, that something systemic will break. Will this be the treasury companies? I don't know, right? It could be something else. It could be a stablecoin. It could be a centralized exchange. It could be all kinds of black swan events. It's very hard to anticipate what the black swan event will be. When Terra Luna collapsed, right, the beginning of the last bear market, it was somewhat foreseeable. So if you were already around at the time, there were some numbers that were concerning. For example, Terra Luna had a treasury that it would use to pay out the yield, and the balance on that treasury was going down over time, and it would only last for another few months. And then people, out of that fear, started to sell UST, the stablecoin, and the DPEG happened. And then the market value of the Luna token wasn't high enough to stabilize the stablecoin. And that's when everything came crashing down. So there were red flags. Very often, if we just look out close, if we have a very close look at things, we can find weak points. If they then will break, is hard to say. Many people have been anticipating a break of Tether, right? People were doubting that, myself included, that Tether is 100% backed by the dollars they say they were backed with. And maybe they were not backed, but they always had enough money to make all the cash redemptions that they were required to do. Or maybe there was fractional reserve in Tether. Maybe that has changed now over the years as they made profit. Probably it has. But there's always potential points of risk in the system that might break. And we only know afterwards. But what we do know is that the pressure on the fragile parts of crypto tends to go up when there is no more inflows into the ecosystem, right? The stablecoin market cap isn't going up, and when prices come down, right? When prices come down, then whoever has leverage in the system through whatever mechanism gets potentially exposed, right? When what's the saying? When the tide is going down, we will see who's swimming naked. That's the idea of whoever has too much leverage will then lose it all. So leverage is beautiful if you have proper risk management in place. If you do have your stop losses in place, if you do have your diversification in place, then leverage can be like fire, right? It can make things warm and nice and cozy and great, and you can cook with it. But if you use too much of it, and just a 4 or 5x leverage most of the time is too much, then the fire burns down your house, and then you're cooked. So, yeah. But yeah, systemic problems can occur, probably will occur as the bear market continues. And then it can make sense to just wait until the blow up actually has happened. All right, have I gone through all the data here? I think so, right? I talked about the backtest. Here are the trend following vaults that we currently run. Ethereum dominance is going down. Interestingly, I'm not sharing the screen. Interestingly enough, Bitcoin dominance also went down. So this is unusual, right? We might expect during a bear market that Bitcoin comparatively holds well, but this is an indication that there is spot selling of Bitcoin going on, so that the OGs are currently pushing down the market, or maybe the DATs. Maybe we will know about this in a few days. Could MicroStrategy be forced to sell Bitcoin? Yeah, I don't think it's MicroStrategy, but maybe I'm missing some data. if you have anything, feel free to share. Amazon has missed earnings. Interesting. AMZ relative to NASDAQ. Yes, interesting. This is Amazon relative to the NASDAQ. Not doing well. Is it a buying opportunity? I don't know. I always like to look at relative valuation charts, right? So I never look at the US dollar charts. But this is an interesting development. The question really is, are technology stocks currently too much exposed to AI? That's the fundamental issue, because AI investments are incredibly expensive. They're very high. And currently the revenue relative to the expenses are very low, right? If people generate AI slop videos, it's not going to make much. The speculation here is that AI will become so smart that we will create value from it that's beyond the current expenses. We can see first potential signs of this. So apparently the more advanced models of AI have been able to solve some math problems, some proofs in math that haven't been able to be solved for decades. So there is some progress in that regard. And there might also be progress, I believe, in the medical field, right? Earlier diagnostics. If you've got more data, you can diagnose easier. You might be able to find better medicines. But yeah, I don't know enough about these topics to estimate how great the progression there is. And then also the question is, when that value gets created, will it actually land in the hands of the companies that currently invest in the infrastructure, right? So if AI helps a certain pharma company discover a new medication, that's not necessarily benefiting OpenAI directly. So yeah, it might be a similar kind of effect that we had during .com, right? AI is useful. AI will be more useful in 10, 20 years. Maybe we will do everything based on AI in 20 years as we do now everything based on the internet. Still, internet stocks dropped by more than 80%. So just too much excitement. This happens all the time, right? So this kind of overinvestment happens all the time. People get excited about a new innovation. It's very hard to estimate how the near-term revenues will develop based on investments, and it will change our lives. But the companies that make the investments don't necessarily benefit from it. It might need a first crash, a first cleansing of the market, and then there are a few survivors that figure out how to actually monetize the technology. We've seen this with railroads. We have seen this with the radio. We have seen this with .com. We've seen this with many technological advances. Always there's a lot of investment, a lot of excitement. And then things come crashing down to then be useful long term. So those bubbles are useful to a degree to the real world, but of course they're painful to everybody that gets burned. What's wrong with your eyes? Yeah, it's early here in the morning, and the lighting might also not be ideal. I actually just ordered some lighting. I can change like the color on stuff here, and it might look different. And I ordered some proper lighting. I've got very cheap lighting here. And outside also there's no light, and so everything is dark, and so it's more orange, and my eyes look red, and it's early, and yes. That's what's going on. My eyes are probably also a bit dry as well. Can you show us a few important charts for Bitcoin since price is going down fast? Yes, I will also record some videos, right? But I think I've already showed a few charts that are, you know, showing my long-term perspective and also my short-term perspective. If we consolidate over here, we're probably gonna stay at this kind of range. I should show my screen. If we consolidate right now, we probably stay at this kind of range between 60, 70K for a while. If we suddenly continue crashing and we're going down to 50 or even 40K, then I'm definitely buying. Then we're very likely going to see a V-shaped recovery. But if the selling now stops, we should be semi-okay, right? So everybody calculates the bottom in October if you completely follow the previous cycle. Do you believe in this? Yes and no. There is a self-fulfilling prophecy effect with those kind of things. If enough people believe in it, it will happen. This might also be one of the reasons why if we measure from the cycle bottom to the cycle top, we have topped out at a very similar point in time. So if enough people believe that we have topped, then we have topped, because nobody buys and everybody sells. This could become another self-fulfilling prophecy yet again, but we have to look at the data at the time. I don't like to make predictions that are that far out in the future. But yeah, there is if we say in October have dropped by 75 or even 80% from the all-time high, we are at 40K, then yes, we probably will have bottomed in October, if that's then the price. Are we in complete panic mode? Not yet. We just see lots of spot selling. I will listen to you. I'll hold my Bitcoin in house and gold long term. Forever. Don't listen to me, right? Just build a strategy based on your risk tolerance, based on your future income. you want to have your own conviction in things, right? If you just follow somebody's advice, you buy based on him, you sell based on him, you don't have own conviction, then you don't really know what to do during critical times like this, right? If you say you bought Bitcoin because everybody said Bitcoin's going up and now it's crashing, then you're wondering, what should I do now, right? If you bought Bitcoin because you know the monetary base is devaluing and I want to sell it in 10 years, you know exactly what to do now during a crash. If you bought Bitcoin because you just wanted to trade it short term, then you know what to do now when it crashes. So it's important to understand why you do something, and that why should not just be because somebody tells you to do so. That's why I share my own approach. I don't just say I buy and sell, I say why I buy and sell. And then you can consider for your own strategy what you might want to do. Yeah, I think that's the best approach. Thanks for the live stream. It's always good to see you on YouTube. Thank you. Gerhard, can you talk about rate evaluations? What's going on in that area? What do you think will happen midterm? And going into a bull market, I think I talk about rate evaluations often in the videos. And I'm not sure if you should discuss this right now during this crash. In general, of course, altcoins tend to be very correlated with Ethereum. If Ethereum sells off more than the rest, then most altcoins sell off more than, say, Bitcoin, for example. I'm still mostly in altcoins since November 2024. It's absolute carnage in my portfolio. I'm down 80%. In spite of continuing to invest into so-called top alts. Yeah, forget about the idea of blue chip alts or top alts. They're all the same, right? They're all coupled to the general macro. I mean, when you look at this chart here, right? This is the last year. What is the top alt here? I mean, there's the smaller altcoins, but even if you go to the 100, top 100, what is the top altcoin here? Is it the pegged gold token? Or is it Zcash that's currently coming down, which was short squeezed a lot? It started with a short squeeze, this rally. Is it the Coca token that nobody has ever heard of? It's probably just short-term manipulation. What's your top altcoin here? So maybe it's Hyperliquid, but Hyperliquid has a lot of unlocks going forward in the next year. And they're trying now to build a competitor to Polymarket. Unclear whether or not this will work. All the price appreciation here is just based on that hope that Hype will be able to take market share from Polymarket. So let's see. Do you think we shouldn't buy until treasury sell their crypto? We already talked about this. Congrats on your $1 million short. Yeah, unfortunately, that's not all my money, right? This is gains that we've made for the community. I just have a small fraction of those gains. Do you think we will break down below 60K to the 300 moving average? Potentially, right? If we break down below 60K, I mean, we're close to 60K already. If we break down below 50K, then you might want to buy the bottom. If you slowly drip into the 60K and 55K mark, it's probably going to stay there. It's nice to see you live rather than a video. Thank you. Yeah, I think it's a different format, right? It's not as dense in terms of value delivery. It's not like here's a data point, here's a data point, here's the conclusion. It's a bit more personal. It's a bit less dense, but I still think it's a nice format, especially for time-sensitive content like this, right? If something gets old very quickly because the market moves so fast, then yeah, it makes sense to do a live stream. Should I sell? When do you see a recovery possibility? Should I sell is best answered by what's your approach, right? You want to check how you approach the market and then base your decisions on those rules. I have 2x leverage short on MSTR. What do you think will happen in the earnings call? I'm not following MSTR close enough to tell. Tom Lee is looking a little worse than Sailor. That's true. Bitcoin is trash. Yeah, actually, these kinds of comments, right? Bitcoin is trash. Bitcoin sucks. Those are the kinds of comments we will see more and more as the bear market progresses. And when I post a video on YouTube and we get a majority of those kinds of comments, that's the time where the sentiment is probably negative enough to potentially buy. So the social sentiment is a very useful indicator as well. Hallo Gerhard, glaubst du ETH in kommenden Bullmarkt stärker performen als Bitcoin? So I translate this. Do you think that Ethereum will perform better in the next bull market compared to BTC? I don't think so. Bitcoin still is marketed as a store of value, even though a very volatile one. And Ethereum doesn't have very consistent tokenomics, has a lot of insiders, and is mainly traded as a risk-on play for a rotation out of Bitcoin. So after Bitcoin has rallied, then Ethereum tends to rally afterwards to increase a bit more exposure. But outside of that, I do not think that ETH will just perform better from bottom to top in the bull market. Okay, let's see if we've got a few more comments. Do you fund your life with trading and YouTube? Yes, I do. Actually, I used to have a corporate job, which I quit roughly a year ago in IT management. And then YouTube got more and more traction, the trading got more and more traction. And now, so right now my income is roughly 50-50. 50% YouTube, premium membership, all that, and 50% trading returns. What strategies do you recommend when you don't have much time to follow the markets? Yeah, just follow the moving averages. So you could either trade this by yourself, or you can also, of course, just invest in the moving average vaults that we have in premium. That's what I would do if I don't have time to do anything else. Solana dominance does not look good. Yes and no. It's actually at a breaking point. I am watching Solana dominance extremely closely right now. It's like I had prepared this. Have a look at this. Huh? Let's take the 1 day then. So yeah, this is the Solana dominance chart, and this is now make or break. So either we see a very nice bounce or we don't, but this is make or break. The decision point will come very, very soon. If we just align those two lows, and we see the highs also somewhat aligned, we've got a slightly decreasing dominance chart over time. And yeah, we will get a decision soon. I actually made a video on Solana just, I think 1 or 2 days ago with exactly that chart. It does not take much more of an underperformance of Solana to decide to get out. Right? So how much do we need to fall to say this is broken? Maybe another 2 or 3%. Right? If Solana was to underperform by another 2 or 3%, it might make sense to exit. And that's also when I exit. I'm long Solana, by the way. So I did not enjoy this move at all. But of course, in the grand scheme of things, right, it was a smaller position compared to the long in Bitcoin, the short in Bitcoin. Retail is scared. QQQ will not yet go bear market. Yeah, it will be very interesting to see what happens once technology stocks sell off. But I do think there is more downside to tech stocks than upsides. That's a German saying, Gerhard. Yes, I'm German. It was such a top when family members and taxi drivers started talking about crypto. Yes, exactly. And recently I heard random friends that never talk about investments talk about silver. That was also the top in silver. This does not disappoint, that kind of indicator. Isn't high leverage okay as long as the position is managed properly? Yes, it is. That's a big condition though, right? As long as positions are managed properly. So you have to make sure you don't get liquidated. You have to make sure you can make on the debt. Are you guys tired of all the winning? This is a reference to Donald Trump, right? You will be tired of winning, and then everything crashed subsequently. Yeah. Like the video. Yes, please like the video. Always like the video. Liking the video is the right thing. Very much appreciate everybody liking the video. Thank you. If you look on DeFi Llama, there's multiple DeFi platforms that have their TVL surging in the last days measured in ETH. What could this imply? Referring to Aave Maple. This only implies that ETH has sold off. So a lot of the assets that are on those platforms are not 100% tied to ETH, right? Some of them are just stablecoins. And so when ETH goes down by 10-20% and there's some stablecoins in that DeFi platform, then of course measured in ETH, the TVL goes up. So it's just that. Are you surprised by the huge silver and gold pullbacks happening so quickly? No, I'm not at all. Feel free to watch the last silver video, which was published maybe 2 weeks ago prior to the crash. It looks almost like I was Jesus. It was interesting. There was just so much leverage, right? We've seen the detachment between the spot silver price and the paper silver price. We've seen all the financing costs for perpetual futures on silver going up. We've seen so much leverage in silver that it was foreseeable that volatility was to come. And that's shown in that video. Feel free to watch that. It's still actually relevant today because it also looks at the macro situation where silver and gold is relative to the US money supply. So this will be very relevant to you if you're in precious metals. It's more likely to be a black swan than a full bear market. Yeah, we will see. We will see. Okay. Yeah, let's see. Yeah, I think that's all. That's like really interesting comments. Maybe this one is the last one. Long-term holders seem to be buying right now, following the chart you show often. Thoughts? Not really, actually. They're not really buying. There is this chart here that you're probably referring to. So we've got the long-term holder supply change. We've got the crypto crash. And yes, they did buy slightly, but with the recent crash, they actually have slowed down their buying. So they're not getting into this crash, right? If they were super bullish, they would actually accelerate their buying with the price decline, which they are not. And so I don't think we will see any rescue by the long-term holders just yet. We have to get closer to the realized price. We have to get closer to net unrealized losses and we aren't yet in net unrealized losses. Okay, hope you enjoyed this live stream. A little bit over 1 hour. I think the duration was also good. Feel free to, as usual, watch the YouTube videos as well. I try to publish 2 or 3 per day. If you haven't yet subscribed, then of course, you can subscribe as well. And see you next time. Thanks for watching. Cheers.